Introduction. Welcome to this educational summary of Trading in the Zone by Mark Douglas, one of the most influential books ever written on trading psychology. Douglas goes beyond strategies and technical indicators to help traders master the mental game of trading. His central message is simple but profound: consistent success in the markets comes not from predicting outcomes, but from thinking probabilistically, embracing uncertainty, and mastering your mindset. This summary is designed to deliver the core principles of the book in a clear and structured format, ideal for traders at all levels. Whether you're struggling with fear, impulsive decisions, or inconsistent results, the insights from Trading in the Zone can help you reframe how you approach the markets and yourself. Chapter 1: The Road to Success, Fundamental Truths. Mark Douglas opens by highlighting a painful truth: many traders fail not because they lack skill or knowledge, but because of poor mental habits. Most traders come into the markets with unrealistic expectations. They want to be right all the time, avoid losses, and find certainty in uncertain environments. Mark Douglas challenges this mindset early. He argues that successful trading requires accepting risk, detaching from individual outcomes, and focusing on the long-term process. A key takeaway here is that the market doesn't owe us anything, it's indifferent. Success comes from aligning our thinking with this reality. Chapter 2: The Law and Trap of Analysis. In Chapter 2, Mark Douglas critiques the over-reliance on analysis. Many traders believe that more data, indicators, or technical knowledge will guarantee success. But he warns that no amount of analysis can eliminate uncertainty or predict the market with 100% accuracy. The core lesson: analysis can help us find opportunities, but it cannot make the outcome certain. Traders must learn to execute trades with discipline and without fear, regardless of how strong a setup appears. Overanalyzing can be a way to avoid making decisions and dealing with risk. Chapter 3: Taking Responsibility. This chapter dives into personal accountability. Many traders blame the market, the news, or other external forces when trades go wrong. Mark Douglas explains that this is a dangerous habit. To grow, traders must take full responsibility for every decision and result, no matter the outcome. Owning the process, not just the profits, is what separates amateurs from professionals. This is the foundation for building trust in yourself, which is essential for trading success. Chapter 4: Consistency, a State of Mind. Here Mark Douglas introduces the idea that consistency is not a result of the market, it's a result of the trader's mindset. The market is chaotic and random in the short term, but over time, edge-based strategies can produce consistent results if executed with discipline. He emphasizes the need to shift from thinking in terms of being right to executing your edge. You're not predicting the future, you're simply playing probabilities. If your edge has a 60% win rate, your job is to let it play out over 100 trades, not stress about the outcome of any single one. Chapter 5: The Dynamics of Perception. Perception is a major theme in this chapter. Mark Douglas explains how traders often see what they want to see in the market. Our past experiences, beliefs, and fears filter what we perceive, which means two traders can look at the same chart and interpret it completely differently. He warns about the danger of projecting expectations onto the market. Instead, traders must strive to see the market objectively, not as they wish it to be, but as it is. This requires emotional awareness and the ability to step back from impulsive interpretations. Chapter 6: The Market's Perspective. Mark Douglas asks a key question: what does the market owe you? The answer: nothing. The market simply presents endless opportunities, it's your job to interact with them with discipline and without emotional baggage. He stresses that the market operates on probabilities, not certainty. Any trade can be a winner or loser, even with the perfect setup. This chapter reinforces the need to think from the market's perspective, not your own, and to let go of the need for control or predictability. Chapter 7: The Trader's Edge. In this chapter, Mark Douglas defines what it means to have a trading edge. An edge is simply any set of conditions that gives you a higher probability of one outcome over another. Importantly, having an edge does not guarantee a win. This is where many traders get tripped up. They mistake one losing trade as a failed strategy, or one winning trade as proof of success. The lesson: measure success by how well you execute your edge, not by the outcome of individual trades. Chapter 8: Thinking in Probabilities. This is one of the most important chapters in the book. Mark Douglas teaches that the key to consistent trading is to think in probabilities, just like a casino or a professional poker player. They don't care about the outcome of a single hand. They care about the long-term application of their edge. He outlines the traits of a probabilistic mindset: accepting risk without emotional discomfort, letting go of the need to be right, viewing each trade as part of a larger series, focusing on process, not outcome. This mental shift can free traders from fear and hesitation. Chapter 9: The Nature of Beliefs. Beliefs shape every trading decision. Mark Douglas explains that many of our beliefs about money, risk, success, or failure were formed long before we began trading, and they often sabotage our performance. He encourages traders to examine and reprogram their beliefs. For example, do you believe that losing means you're a failure? That markets are out to get you? These beliefs will cause fear, revenge trading, or paralysis. Changing these beliefs is essential for becoming a disciplined, emotionally stable trader. Chapter 10: The Impact of Beliefs on Trading. Continuing the belief theme, this chapter dives into how beliefs interact with perception and decision-making. Once a belief is accepted, the mind will find evidence to support it, even if it's damaging. If you believe the market is dangerous, you will see threats everywhere. Mark Douglas introduces the idea of a mental framework, a set of beliefs that supports confidence, discipline, and clarity.